Thanks for tuning into Mirror Now. I'm Avni Raja and you're watching Investors Guide, a show where we guide you and help you on how you can manage your investments and step by step tell you what are the best ways that you can plan your finances. Joining me on the show today is Feroze Azeez. Feroze, thank you so much for joining us on Investors Guide. Now, over the last few weeks, we have been talking about mutual funds and we've been talking about what are the things that you need to keep in mind when you decide on which funds to invest in. Now, just as it's important to take a proper call on which funds to invest in, it's also important to know when and the reasons why you should be exiting from funds. What should you keep in mind? What should you know? All of those things are extremely important as well. So Feroze, we're going to start off by talking about how you should really exit a mutual fund and when you should exit a mutual fund. So there are some key things that one should really keep in mind. If you can take us through that.
Avni, when a mutual fund, like you said, it's very important to choose the right mutual fund and buy it. It's also important to eliminate some funds at a point in time from your portfolio. And there could be several reasons to do so. One strong reason could be an internal reason that the objective which you had set yourself to achieve with this specific investment has already been achieved. So when your investments are already achieved, you should exit, point one. Point two, if there's a scheme which continuously underperforms the benchmark, then it's a worrying sign and you can consider to exit that specific scheme. So checking whether the scheme has beaten the respective benchmark. If it has beaten, then it's a good performer. If it's not beaten the benchmark, then it's a worrying attribute. And if that continuously happens consistently, if it keeps underperforming, then it's an exit candidate. These are two large primary reasons. But the third reason is if there's a change in the fund manager. Because fund managers are professionals, sometimes a fund manager moves out of an asset management company and changes his job. That in turn leaves that scheme more vulnerable. So whenever there are fund manager changes, it calls for a reevaluation whether you wish to stay invested or you should consider an exit. Fourth, sometimes the scheme itself changes the objective of itself. Like, for example, recently, SEBI made some changes in the multi-cap funds. So quite a few funds might go through a change in their style itself. So that could be the fourth reason. And if the fund has a longer or a shorter period than you wish to stay invested, these are the 4-5 very strong reasons why you start deliberating on an exit from a scheme which you've already bought.
Right. Feroze, very, very important points that you've mentioned there. And of course, those are things to keep in mind as well. But also the other aspect here is before you choose or before you decide that you need to exit a fund, there are some other things also that you should be aware about really, because the people do tend to exit funds hastily, which also shouldn't be done. You shouldn't sort of think that within a year, if your fund is not performing, decide that you want to, exit it. You have to give it a proper fair amount of time to see how a fund is really performing. You also need to know about your tax liabilities when you're exiting. That's something else to really be aware about. And also, Feroze, the exit load. Again, something that not too many people may be aware about, that some funds, if you withdraw before a certain time, frame, then you might have to pay an exit load as well.
Yes, all the three reasons which you said, people sometimes redeem their money from specific funds because their performance for 1-year periods or 2-year periods has not been good. They begin with an objective for 10 years, but they see those first 2 years not being stupendous, then they exit. So the 10-year time frame needs to be retained if that's what you initially thought you were going to invest for. So don't remove or exit a fund in haste. Because these are cyclical. Equity investments are not like a fixed deposit that they go linearly upwards. They are going to be cyclical. So that's not exiting a fund in haste is very important. Second, if you've chosen to exit or if you're considering to exit, these two costs which you mentioned, Avni, one is the exit load and the tax implication of that transaction is very important to be considered. So exit loads, like we all know, are those costs which are levied to you when you exit from a fund prematurely. So generally, equity funds have a 1-year exit load, and some debt funds have in the range of 1 to 3 years of exit load. So please make sure when you're redeeming units from a mutual fund, make a check whether you are in that period, and will that cost of 1% to 1.5%, 2% also in certain cases is going to be levied. So that's item number 2. And 3, taxation. Make sure that your units are in the long-term taxation category, so that the tax implication is going to be lesser if you redeem it after 1 year in equity and after 3 years in debt. So tax and exit costs are important implications of a transaction of an exit.
Right. Feroze, again, this is also something that important to highlight here on the ways and means by which one can actually exit their funds. What does one have to do? A little bit of procedural thing, but I think important to highlight as well that it can be done both physically and on a digital platform as well, either through the company's website being one option also.
Yes, Avni, I think it's very important to first understand how you've bought it. If you can buy a unit either in physical form or digitally or in the form of a demat. So if you have bought it through a broker, then you have to give an instruction to the broker to sell it. If you've bought it in physical, you will have to fill in a physical form for redemption. If you have bought it in physical, you also have an alternative to redeem it digitally by enrolling yourself for that service. So you have to make sure that you know how you have bought it, and the redemption, if it is a demat form, will require to be sold in dematerialized form through the broker. So it's important to understand before you embark on the journey of the redemption.
All right, Feroze, thank you so much for joining us on this episode. Some extremely important points to remember about exiting mutual funds. But on that note, we're going to wrap up this edition. And on the next episode, we're specifically going to talk about how to monitor your mutual fund investments.